It's another Personal Finance Friday, and we're going to take a look at a topic that has all investors, really in all types of investments, paying close attention and watching. Stay tuned. Hello to all my investor friends out there. I hope that you have had an amazing week. We have made it to Friday. I hope everyone has some amazing weekend plans. We're starting to get to warmer weather. Hopefully we're all getting outside, having a good time with friends, family, hopefully kind of getting through the rough past year that we've had, hopefully. But today I'm going to be talking about an economic indicator or just something that is a buzzword right now that everybody seems to be paying attention to. Before I dig into it though, please hit that subscribe button, the like button, karate chop the notification bell, as my son and daughter would say. Let's get started. Inflation. It is of concern to some people, to a lot of people, frankly. We know that over the last 12 to 15 months, money has been printed. We've given out a lot of stimulus in the United States. There are estimates that anywhere from 20 to 40% of all US dollars were printed over the last 12 to 15 months. If you can wrap your head around that, just think about how much money has been kind of pushed into the economy. And, the big question is did we need that? A lot of times the governments will do that to kind of spur on growth, to kind of make things happen in an economy that's suffering. And you could argue that, yes, with the pandemic, you've had restaurants shutting down, you've got service business of all types shutting down, you've got massive job loss, unemployment. So there is this is kind of a stimulation of the economy, but it does reach a point, though, where it gets a little bit, concerning, especially when we see prices go up the way that they have. Prices of building materials, whether it be lumber, steel, prices of homes are at all-time highs in many cases. Prices of assets across the board, collectibles, sports card, coins, comic books, all of these things have seen a huge boost over the last 18 months. And there are other factors, of course, that play into those booms in the collectibles market, a lot of them revolving around nostalgia. But, this is just certainly a part of it. An interesting statistic that I saw recently was that last year, median household income was up to about $80,000 to $90,000, which when I heard that, I was thinking, man, that seems really high. 80 to 90,000. I actually thought that it was more in kind of the $50,000 to $60,000 range as an average, as a median. And that's exactly what it typically is. And basically what they were saying is the other 25% has come from stimulus, has come from government, from government subsidies that have pushed it up to $80,000 to $90,000. But the problem with that is that it's not going to stay there. It's not going to continue on. We don't think anyway. I don't think that they're going to continue to pass stimulus for years and years to come. Maybe that is something that changes. I don't know. But that's really an interesting statistic, shocking, really. And so you see all this money that pours into the economy. It's got to go somewhere. Stock market's at all-time high. Real estate's at all-time high. And of course, you have people that are just trying to pay bills that have had job loss, et cetera. But, the negative impact of too much of all of this is hyperinflation. And that's what you hear a lot about is, the concerns for inflation. Now, what is inflation bad necessarily? This is also another interesting debate because if you have years of deflation, inflation isn't necessarily a bad thing if prices have been kind of at a low for a long time. Inflation can kind of kickstart. Demand has to kind of reach that, as money is pouring into the market, it creates demand, which has to be met with production. And so that's the kind of the purpose for it. But I guess that's kind of a question too. Has pricing been lower than it should have been? And then inflation kind of helps to spur that on. That's an interesting kind of counter argument to this as to whether inflation is all bad. But if it goes too far, then we run into an issue, where you have hyperinflation and it's not good. Hyperinflation creates asset bubbles. That can be a concern. We look at that when it comes to, different markets. I talk a lot about collectibles on this channel. Some would say that collectibles are in some of these little asset bubbles. May or may not be, because there's other factors outside of just inflation that have spurred on the collectibles markets. So that's I wouldn't just say that it's just inflation that's pushing prices up. I think that it is just high demand based on kind of what's been going on. But recently, what have we seen? And this is kind of interesting. We've seen digital currencies that have taken a big hit over the last couple of days. We've seen sports cards and some other collectibles have finally kind of come back down to earth a little bit price wise. And I kind of wonder, so there has been hints from the Fed and from the government. They haven't said anything for certain, and it's been kind of a mixed signal. You have some of the Feds, the Fed people that are just basically like, hey, everything is fine. There's no inflation, or maybe there's a little bit of inflation, but it's temporary. We're not worried about it. But then you've also got kind of other elements. There's chatter about them raising interest rates. And if they raise interest rates, then that has a counter that typically historically has the opposite effect of high prices. It brings prices down. And so that's something where I kind of wonder if people are, hedging, maybe moving back into a cash position, selling off certain things so that they are ready for an asset crash. If they're kind of gearing up for assets to come down in price, then maybe it's kind of selling off and getting ready, stocking up cash and getting ready for, a potential real estate drop or a potential, index, equities drop, or, collectibles that they've been trying to maybe buy the last couple of years. Maybe there's a drop there. So I think that that's really interesting. Kind of these ebbs and flows of these markets really, really are interesting. You see the same thing with cryptocurrency, with digital currencies. They've taken a big hit over the last couple of days. Is that just kind of a hedge, kind of to get some, be in cash and be ready if there is, other kind of investments to get into? I'd like to hear your thoughts on this subject too. This is really, really intriguing to me. It's kind of a dance that we're all doing. What we're trying to do, my household, is we're trying to figure out a balance between all of these things. So, there is an element of, okay, maybe we do need to have cash in place that's ready in case there is a real estate crash, or there is an asset class. Asset classes take a hit, prices come down because interest rates have gone up, have been pushed up. I personally don't think that the government is going to mess with interest rates. I think they're going to continue along the same path, but I'm not certain of anything. I'm no clairvoyant. I have no idea what's going to happen tomorrow. So I also kind of like the idea of having cash on hand in case something like that does happen, and being ready to be able to get in on, those assets as they drop down in price. If you look at, there was mega wealth made, frankly, in 2009. When the recession hit in 2009, the subprime mortgage crisis, there was a boatload of money made. There was people that were buying on those lows. There was people that were buying real estate for nothing. You remember, I remember the short sales and all the stuff that I was really kind of too young to get in on it. I wasn't really an investor at that point to be able to really make a splash. But even then, Warren Buffett poured a bunch of money into Bank of America because Bank of America's stock went down to, the lowest point it had been in however long. There is a lot of money to be made when those dips happen. And we always, everybody wants to be buying the dip. Everyone talks about, we got to buy the dip, buy the dip, but then when the dip happens, some people buy the dip and some people want to wait for it to come back up, so it's kind of a funny dance that we're all playing. But inflation is the big thing, and interest rates by the Treasury, by the government, that's really the big marker that is, I feel like people are, especially the high dollar folks, the high net worth investors, I think that's the stuff that they really pay attention to. And they're trying to figure out where they're going to have their holdings so that they're ready to go whichever direction it kind of goes in. So yeah, for us, we're going to kind of, in a boring sense, diversify it to where I think we're going to try to have some cash ready, just on hand. Whereas, it's kind of counterproductive to what's happening right now in your savings account. You get, 0.01% interest. But if something does change where interest rates go up and, asset prices come down, then all of a sudden our money is in a good place. So it's kind of finding that balance. And look, if they don't ever raise the interest rates and we just kind of keep on going, then it's still not going to be, very advantageous to have money just kind of sitting in the savings account. But, some would say cash is king. It's not right now. It hasn't been as far as making money on interest, but you never know. You never know. So, we haven't touched interest rates in over 10 years since that subprime mortgage crash. We haven't done anything with it, so we've literally just had zero interest rates roughly, for 12 years, 11 years. And that's partly kind of led to where we are now. So what would you like to see happen? And I think this is kind of an interesting conversation for viewership. Would you like to see interest rates rise so that maybe it does promote quote, savings accounts and that bit? Or do you kind of like the way that it is now with interest rates being very low? Does that help your business and your investing? What would you like to see happen? Because I think that there's kind of an argument on both sides. The other part is just the national deficit and kind of the concern of, interest rates and how that affects our own debt. So anyway, guys, I know that I have some great viewers and people have reached out to me. I want to kind of open up the personal finance piece of this channel. The channel is called The Personal Finance Dad. I really enjoy talking about this stuff as well. And I've had viewership reach out to me, mortgage professionals and retired financial planners and people that really know their stuff. I would like to kind of broaden that part out. So keep on reaching out, please. I have gotten your emails. I know I haven't gotten back to you because it's just been kind of a crazy week, but we are going to try to build this out and build out these conversations because I think it's really worth talking about and very important for everyone to understand and grow into, including myself. I want to learn from you all as well. So guys, thank you very much for tuning in today. I hope that you have an amazing Friday and weekend. We try to end each video on kind of a positive note, talk about life a little bit. And I think that there is, I think resiliency is incredibly underrated. I've met some people recently, that I'm really inspired by, that have overcome some big time odds that I've met recently through this channel, that I really appreciate. And, it just brings you perspective, and perspective is so underrated because every single day we sit around and maybe we have, a bad day or something. And man, there's we're alive, we're here, we're able to make something happen. We have another day to make something happen. I think that is exciting, so let's be excited for life, make the most of it. And I wish you all well. Stay awesome. I'll see you next time.